All right, what's good, guys? Welcome to another daily recap. We're here, we're ready. Have some energy, so that's good. So we have time. I have time to go in more detail. We're 2 hours earlier than yesterday, so let's dive into it. It was for the long trade, I think. Oh no, for the short. Oh, it actually played out. That's nice. Interesting. Because I was talking about this area this morning. That's sick. That's good. I like that. All right, let's break it down. Let's start just with the most important thing, and that's the high time frame. Where are we? What can we expect? What were we aiming for? So last week, weekly candle was strong, was really strong. And until Thursday, this week has been slow. What indicates us, we know that we have a bearish structure here, and we know that we are in the premium of this bearish structure here, which this was the last leg to the downside. And now the slowdown, ooh, that might indicate that we're going lower. Is there reason to go lower? There's enough reason to go lower. We got some to go lower. We got some weekly equals out down here. We didn't reach into premium pricing, discount pricing on this bullish range yet. We reached into premium pricing of this bearish range. We took some internal range liquidity. We tapped into this 4-hour supply zone. So there's more than enough reason to go down. However, until we actually go down, we look for longs. Now, why do we look for longs? Why do we look for longs? Because we have this bullish range, and that's my most recent high time frame range. I play, I trade on, I use for bias, that etc. So I don't go higher for this to trade. Only go lower. So yeah. And now what can we see now? We took internal range liquidity here. Oh, my chest did a chest workout, a little bit heavy, so my chest is, how do you say it? It's cramping a little bit. Let me drink some water. We can see that we took internal range liquidity. We tapped into this 15-minute demand, and then we got a strong push to the upside that can go. And now it seems that price is going to continue. Look at this momentum. We can also see if we go to the lower time frames that we haven't reached discount pricing many times. You got this bullish break here, and then this was our last discount pricing. After that, we never reached discount price, just continued further up. Oh, my chest. Goddamn. Yeah. So based on that, would say price is still going higher. That's pretty based on price behavior and that most major blue structure. However, this red structure is seems to be very valid and very strong as well. You can see that we came above here. I spoke about that as well this morning. Shorts above Asia high, but even better to take shorts above that liquidity pool. And we can see we get that inducement. We'll go into it in a minute. And then we got that move down after taking that liquidity. Now let's look at DXY. So we have this red range, red structure, and I marked this out this morning as well. We got those equals to the downside, and we can see that DXY took those equals over here. We had equals, got that slowdown, inducement, nice inducement, inducing buyers. Where do those buyers come from? Actually, maybe it's not even inducement. So you can see this support and resistance area over here. It's quite large. Can maybe refine it. So they will put their stop losses below the support and resistance area. Around here, like this. See reaction, all those reactions here, maybe a little bit higher. Maybe like this. and then we can see that we pushed through, and then maybe they were expecting short moves because we close to the downside. Yeah, that's it. That's it. So inducing buyers, actually inducing sellers, yeah. So the induced sellers coming here, smart money buyers, maybe. No, so how is that working? Yeah. With this support. So with this demand zone. So inducing buyers with the demand zone, smart money buyers, that been taken out. This closure to the downside is inducing sellers, retail sellers. Why? Well, they use support and resistance. We can see that close to the downside, so they look to trade to the downside. What actually happens? Give them that little push. They put their stop somewhere above here, above that support, and then that's taken out. I don't know if it works like that, but yeah, I don't know. But for me, it seems to work like that. So that happened, got that liquidity grab, got that turnaround, and yeah. So with that idea of the inducement up, taking the liquidity and then the move, we can look at EU and look at trades. So for EU, it would mean that buy trades were very valid over here to target that liquidity. So we're gonna look at both sides, of course, and of course, this happened pre-New York. So let's dive into it. Now, we know that we had previous weekly highs. Previous weekly highs are taken out now. So I'm actually gonna do it a little bit differently. Remove the blue one again, and then this is my previous weekly high top. Then Asia took previous daily highs, and on the 50-minute, we can see that market shift to the downside, break of structure, or change of character, whatever you want to call it. And then we got that move to the downside, and we can actually see that we were building up some equal lows here. Now let's go to DXY again, see if we had equal highs here. Not really, that was that bullish break. Oh yeah. So equal highs here, and then we got that turnaround. Liquidity. All right, let's zoom in further. Yeah, Vedic. So that was my sister. All right, so we took liquidity. Let's see. Okay, so we got the bearish market shift. And we know that what's it called? DXY had that equals to the upside. It was very likely that EU would push up for DXY to push down to take that take those equals on DXY and then get a turnaround. So let's first look at the sells. Why sells? Well, what is that? Well, sells, although we had those equals on DXY, we also had this bullish break. So we had bearish, we had a low, a high, a lower low, and a bullish break. So that's quite nice. Previous daily highs taken, giving us that turnaround in the 50-minute. So it's very valid to look for sells. Now there was not a clean supply zone, so that's another reason why it probably didn't work out. But there was not a clean supply zone to trade from. However, there was a nice fair value gap, which I marked on this morning. I said, ideally, I want to then, instead of using the weak supply zones, I want to use the PY and the fair value gap that sits over here. And if we just zoom in, we can maybe spot a trade. So we got the bearish break. Now we need after that, we need a confirmation entry from this area. Now, in addition to that, we need ideally some premium pricing, which we get as well. So that's good. We can see we have one nice, we have liquidity here. So that's been taken out. Why do I do it like that? Why do I need to change? There's no need to change. There you go. And we can actually take it moved again. It moved again. Doesn't matter. Let's focus on this. And on this one, then of course. So that's basically the 50-minute PY. That's his for value gap. Let's just keep that in mind and let's not mark it on. So we got that 50-minute for value gap, and that's a 50-minute PY, sorry, not for value gap. So first of all, we can see internal range liquidity, very nice. We got the bearish break, and now we're looking for early sellers on the way up. What can we see? We see a low, a high, higher low, high bearish break. So first one for early sellers, but not really clean. And here we got some more deeper moves because this is like, yeah, how do you say it? Like that first break, it's just a break to the upside, break, or even making equals here, but it's not reaching that discount pricing. So, and we're not even above that liquidity yet here. So this, actually, let's use this one. Over here is our first early sellers. Now that we got the early sellers, then we get a 1-minute break. Thing is, I hope this is a 5-minute break because we're not using that supply zone, and therefore we want to see better confirmation. So that's a bit tricky. It's just one candle. But if you use the 5-minute, you can use this candle as well. And then you have your 5-minute break. So both are very valid, both are very visible. Into 1 minute again. Over here you have your 1-minute break. And this is looking super clean for now. Tapping into that 50-minute for value gap. Now the thing is, there's no internal range liquidity to this leg, but liquidity is taken, impulse followed by impulse. So it's indicating price wants to move lower. Now, as I said, why do we trade lower? Because we took previous daily highs. We got a 15-minute breaker structure. So we are looking bearish, although just a short trade. Why just a short trade? Well, there's two options actually. First option is not to trade at all. Why not trade at all? Because we have those equals down here. Oh, what the hell? Because we had those. Where is it? Ah, here. So same story as on EU. We had the liquidity on EU. We had those equals on DXY. I think there's not. Those were not equals on. No, there were no equals here. All right, so let's dive further into it. So we have the break, liquidity taken, fair value gap, structure, 50-minute structure is bearish, it's on our side. We took previous daily highs, liquidity taken, we took some nice equal, took some nice pull here. Not the strongest break, but yeah. Now here's the thing. Actually, there's no thing. We got Frankfurt Open, and after Frankfurt Open, we are allowed to enter. And we can actually see that not at 7 o'clock, but 7:01, our entry gets hit. This is a bit scary, maybe, but it's valid. So let's take it. And then would you put it here? I don't think so. Like, maybe I should make a new rule for this. So instead of using this, I can put like this, and then again like this. And then this is 25%. That's 25% to the left side as well. Oops. This one. And yeah, it's looking way cleaner if you ask me. If this natural value get pulled up, I'm just thinking out loud because or thinking this out because I wouldn't like take it all the way down here. So you got this bearish break. This is your range now. Yeah, there you have my answer. So take it from around here. Not the from the fair value gap, because that's too much. Let's say you give it a little slippage. You don't like take off maybe 77. I would say 70. Yeah, around this wick here. That's on the low time. I think this is on a low. Just put your short there. You put your stop up here. 7.8, 3.3. And that's it. And then it doesn't give you anything. Nice. Ah, that's unfortunate. It looks so nice. Unfortunate. But since this is your trade, then after breaking here, you reduce to here. Then after breaking down here, you reduce to breaking here. You reduce to above here, breaking here. You go break even. And this is a break even trade following that minor structure. That's unfortunate, actually. Now, the idea of DXY, and I can't imagine people take trades like this because, as I said, there's not much internal range liquidity here. So, except for this, but this is just 1 or 2 weeks of down on the 50-minute, no, nothing more, nothing less. So from here, you just can look for buys. Now, I want to do it because of where we are in price, but with the idea of price never reaching discount, following momentum, all that, there is actually a nice trade. And the reason I still mark it out is because in the future, I see it so often that I get used to it and I can trade it actually. Who knows? But then I have to figure out when it happens, etc. So that will take some time, especially now I'm not testing stuff. It will take a lot of recaps before I see it. And this one is pretty straightforward. You can see we have early buyers here. Just, oh, perfect. We create equals, get the buyers from this so-called support zone. 1 minute support zone. Stops below that, people get taken out. Then we get the break. What happens after the break? Total carnage. Total. And then over here, now I'm curious, because this one is way bigger than this one. It's almost double. Let me actually check. So this is half. Yeah, this one is almost double. So here you can take the entire breeding room. And now I'm curious. Because on this one, it doesn't hit. So 37, 47. And again, if you slip it a little, maybe you're lucky and get a better entry. Otherwise, this would be your entry, and that's fine. It's perfect. Nice 5.5 pip stop. And you target this liquidity, nothing more. This is where to partials or even close your trade because this is your liquidity point in your 1 to 4. Why would you do more? So we take the liquidity. I would maybe close 80% being unaware and then trying to come higher, but that doesn't work. Now we actually come close to that liquidity level here, so that's nice. We come up, we take that liquidity, and now we get the turnaround. You know where we reacted from? That's this liquidity point. We can remove this. We can extend this. I'm gonna put it a little bit above so I can do my analysis. And let's go lower again. So see bullish structure, and there's actually no entry that fits my plan. Oh, maybe. No. because you get your early sellers here. This was low that led to that high, coming down, taking the point, and here's your market shift. You actually can, if you take that entire mass of candles, you can enter there. Otherwise, you don't get an entry there. Another thing, again, with New York, pre-New York, you take all that, get the bearish break, bullish break, another form of early sellers. No, it's after that. Oh, hold up. So actually, so you get your early sellers here. Yeah. What is this? No, stop lagging. Hold up. Is it just my whole laptop is lagging? I don't know if I'm still talking. One second. Um, all right, I think we're back. Yeah, all right, that's still working. It's not showing euro dollar, so I'm gonna hold up. 1 second, guys. I'm sharing my screen, but you can't see the screen I want to share. Stop sharing. What is this? Why is this so complicated? Is it possible to just close one? Mm, 1 second, guys. All right, I think it's working. Back to trading view. All right, it's sharing again. So this actually, give it a second. There we go. We're back. Hopefully, otherwise I will be talking to a black screen. You guys have nothing to watch for. It is what it is. So here's actually the break. And as you can see, it was after this wick. So then that means that this was the break. Then this is your supply zone. It's kind of messy, I know. So you got a high, a low, a lower high. Oh, high, low, high, high, low, higher high, higher low, a higher high, and a bearish break. This is your, yeah, it's early sellers bearish break. Strange to look at it like this, but and then this is your entry. There's actually a nice entry here. Well, it's really messy, but it is very valid. 6, 4, 5, 4. 6, 8, 7, 3. And this is the trade of the day, targeting that liquidity. 4-stick parse at 1 to 4. This is your trade if you trade New York or whatever, but not London, or after London as well, or you trade the whole day, then this is your trade. And this is actually super clean. Breaking it down again, early sellers here, taking that liquidity, lining up with DXY, taking those lows over here, taking those equals, and then giving us that turnaround. They took it actually a little bit earlier than EU, but that's all right. And that's Where oh sorry. This is where the turnaround came from, right? DXY consists of EU. EU doesn't consist of DXY. However, DXY is more leading, but you can see that DXY had to wait for EU to take that liquidity. So you can see at 9:05, we took this liquidity on DXY. EU 9:05 only took Asia highs, so get that move down, and then we had to take that higher liquidity before DXY and EU could turn around. Very interesting because you use DXY as your leading confluence, but EU in this case was actually more leading than, or more major, more stronger, because DXY because DXY had to wait for EU to grab liquidity to move to the downside, not the other way around. Now, of course, it was maybe news or whatever, but if you just look at timing and price action, that's what happened. Now let's look at GU. So GU again a little bit more messy. You can see that we had this bearish break and we were still inside this bearish range, and not that clean as I said on GU. Then we come above here. You could maybe look for longs because you can see that price is building up those equals here. So you got equal highs here, liquidity, move to the downside, and then you would wait for the turnaround potentially. Don't ask me. You can see the turnaround here. You can see your early buyers here. Last high that led to a low, taken out, bearish continuation, bullish break, return to discount. And then that's that long, but it's not that clean as on EU. And then DXY takes those highs. That lines up with nice. That lines up with EU and DXY taking the lows, EU taking the highs as well. And that's where the move comes from over here. The move came from after previous daily highs. And now we got that bearish break. And we can actually look to see if there's an entry on the 1 minute. And there actually is. So you get your early sellers here taking out this low, leading to that high. Now, if it's on the 5 minutes, even better. Yeah, so 5 minute early sellers push to the upside. The thing is, you're not gonna use this one. It's just not just no. Find a way, but not this way. Well, if you trade 1, 2, I don't know, you don't even get tagged in because you need 1 pip reading room. How are you gonna leave 1 pip reading room? 847 for your entry would be here. It's huge. So to actually get tagged in, it should be over here. Stop above the high 1 to 2, not even. So that's huge. So yeah, nothing there. Now we can see some bullish moves here. Nothing really. You could take like the continuation. So bearish order flow being formed after tapping into that discount, you could maybe use that as your entry. Other than that, so that would look like 1, 2, entry from here, and continue down. But then you have that liquidity over there. Yeah, bearish break here. Change the discount. No, that's not really it down. That's not valid because then we break bearish again here, and then we follow that structure. So that's not valid either. So yeah, GU not really it. EU was very clean. Lining up with the XY. And that's it. All right, that was the recap for today. Catch you guys tomorrow. I will leave more for the pre-market analysis. Peace out.